Hey guys, this is Abhishek here, and today we're going to be discussing about 5 reasons why you should consider investing in the stock market. So let's go. And just a disclaimer, guys, this is not an investment advice. So whatever I am telling you in this video is just my personal opinion and is what I feel, and I'm sharing with you facts and things that I do on a personal level. But this is not an investment advice. So if you do want to invest in stock markets, please do your own due diligence before you invest. So let's go. So the first reason why you should consider investing in the stock markets, because as you can see we have the Nifty chart opened up here and I have drawn some support and resistance level here. We are currently in a sideways moving market, right? So as you can see the market is going up and down, up and down. So this is called the consolidation phase in the stock market, and if we see the history of the stock market, we can see multiple consolidation phases that are happening here and here. This is the weekly chart of Nifty, and after every consolidation phase we can see a rise in the momentum, right? This is the corona crash that had happened, and after this the markets moved up quite a lot, but now it is starting to consolidate a bit, and my assumption is that over the next few months after consolidation, Nifty is bound to touch 25,000. So if you invest right now, it will give you optimal returns in the future. We can also observe that there is different scenarios that is contributing to this crash in the market. There is the war between Russia and Ukraine, which is putting a lot of pressure on these stocks, and investors are backing out. So there is a downward momentum right now, but I'll tell you about a strategy which would work in the long term in the next steps. So the second reason why you have to invest in stock markets, why you have to consider investing in stock markets, is because a lot of stocks are available at a discount right now. So I'll just show you a few of the examples. This is Punjab National Bank. As you can see, it has fallen quite a lot. As you can see, this is Punjab National Bank and it has fallen quite a lot, and now the stock is recovering. And I have not just chosen these stocks randomly, but I have done my fundamental analysis, and these are fundamentally good stocks. And you can choose fundamentally good stocks by looking at their balance sheet, looking at their cash flow statement, and these information will be available in different websites, and some of the examples are Ticker Tape. It is one of the platform where the financial statements of these stocks are available. And if you want to look at applications, then there's an application called Stock Edge, wherein a lot of valuable information is available relating to the stocks, the financial position, who are the shareholders of these stocks. So analyzing all of this and choosing a fundamentally strong stock becomes important. So PNB is one of the examples. There's Amaraja Batteries, and these are my levels of support and resistance. So there's a strong support here, and the stock is currently trading at 585 rupees, but it has the potential to reach almost 1000 rupees. But this might happen in the long run. So if you are considering to invest in these stocks, then you have to hold them for a long term. And this is not investment advice again. These are some of the stocks that I have personally invested. And the next example is Dabur. So this is an FMCG stock wherein we use these products every day, and currently it is trading at a discount. It's almost 17-18% down. So easily you're looking about 18-20% gain if the stock rises up, and it will move according to Nifty as well. So do your due diligence. This is not an advice to buy this stock. These are just some of the stocks that I have personally purchased. So do your due diligence, look at the financial statement, and then take a call. The third reason why you have to invest in stock markets, and this is more of a tip on how to invest in stock markets, is make an SIP. SIP stands for systematic investment plans. So if you have, let's say, 20,000 rupees and you want to invest in Punjab National Bank, do not invest all the 20,000 rupees at once. Take create a systematic plan wherein you invest 5,000 or 2,000 once in a month or once in 2 weeks. So this plan will help you to average out the price. So even if the stock is falling, you have a systematic plan, and if the stock price falls, you will be able to buy a larger quantity of shares. So this is called averaging out of the shares, and it is a good plan to start off in the stock market if you are new. There are also different types of websites and applications that are available, and one of it is a small case wherein you have to invest a certain amount of money, and if you're not thorough with investing in stocks and doing fundamental analysis, you can come to this website and choose stocks according. So there are top 100 stocks and the minimum amount is this, and you can see the returns it's given over 3 years. So all weather stocks, dividends, there's equity, gold, and according to your perspective you can take a call. The fourth reason why you have to invest in stock markets is because of the news that has currently come out, wherein the settlement days is reduced to T+1. What this means is after you settle your trades, it takes less than 24 hours to complete the settlement. Before it was T+2 days, that is trading plus 2 days for the settlement to get done, but it's going to be reduced to T+1, and the government is planning to implement this in stages. So within the end of the year, all the stocks will be eligible for this T1 settlement, which makes it good for the investors because they can pull out their money more faster, and it's more appealing to foreign investors as well. The fifth and final reason why you have to invest in stocks is because of the long-term perspective. So if you are earning money and you want to save it, investment is a good avenue to do so. You can split the money across several platforms. You can buy bonds, you can buy mutual funds, or you can directly invest in stocks or small cases as we discussed. But I would just like to tell you to have a long-term perspective because it will help you to grow your wealth exponentially, right? So please trade safe, and this is not an investment advice. Please do your own due diligence on the applications I've mentioned, such as Stock Edge and Ticker Tape, wherein you will get the information. So do a bit of analysis and make sure you invest your money safely. Thank you, and see you in the next video.